Good morning and a happy Monday. Hope you had a restful weekend. Welcome to today's episode of Morning Well. Three things that we will talk about. Almost a quarter of US layoffs will become permanent. The week ahead, and medium S&P stock has never been more expensive. The S&P 500 edged towards a fresh high on Friday and lodged a fourth consecutive week of gain. That's its longest winning streak for the year. Stocks drifted higher this week during a quiet stretch of trading as investors tried to reconcile uneven economic signals with expectations of further stimulus from governments and central banks. The broad stock market was up about 0.3%, which is a record close. The Dow was up 0.7%, pulled higher by gains in Apple shares. The Nasdaq also was up 0.4%. Apple, which was the benchmark's biggest gainer, surged 5.2% ahead of the 4-to-1 stock split that is going to happen today. For the week, the S&P gained about 0.7%. Dow was roughly unchanged, while the tech-heavy Nasdaq jumped about 2.7%. Housing has been a bright spot, giving a boost to home builders. New data released on Friday showed that sales of previously owned homes surged in July as low interest rates and a desire for more space helped home buyer demand. In other markets, the Euro Stock 600 slipped about 0.2% on Friday. The Shanghai Composite gained about 0.5%, while the Nikkei 225 added about 0.2%. Almost a quarter of the US layoffs will become permanent as joblessness is really going to linger well into 2021. This is according to estimates by Goldman Sachs. Rehiring prospects for temporarily laid off workers has started to deteriorate in July, is what The Economist has noted. Goldman expects rehires to account for most of the 5.6 million net job gains that they anticipate later this year. The week ahead, the Fed's annual Economic Policy Symposium, typically held in Jackson Hole, is set for 27th and 28th of August via live stream. Jerome Powell takes the virtual stage on Thursday to speak about Fed's long-awaited monetary policy framework review, which is focused on the new inflation strategy. On key data to follow will be the US second estimate of the Q2 GDP, durable orders and personal income and outlays. Canada and German second quarter GDP updates also will be coming through. Eurozone's business survey, China's industrial profits, and the Bank of Korea will be deciding on interest rates. The median S&P stock has never been more expensive. There are a couple of ways that you can look at this. The first is obviously the price to earnings ratio on the S&P 500 measured against the past 12 months of earnings stands at 25.26. That's the highest level since 2002. The forward PE measured against earnings expectations for next year is at 25.98, a mark last hit in September 2000, right? That's the broad index. Now, if you look at the median stock, the valuation of the median stock in the S&P 500 measured by the forward PE is now in the 100th percentile of historic levels according to Goldman Sachs, going back 4 decades, which is the highest level possible. The index itself is trading at the 98th percentile. Another valuation measure called the CAPE ratio or Shiller PE is even higher. The metric looks at the past 10 years of earnings and adjusts for inflation. The benefit, according to the economist Robert Shiller, who popularized it, said that it provides a longer term view on the valuation, which is fair enough because we have this double black swan kind of event that has hit us in February and March. The CAPE ratio has risen as high as 30.63 as of August 11, a level that has rarely been exceeded over the past century. In December 1999, it peaked at 44.20, and in 1929, it rose as high as 32.56. Lastly, you have something called as the Buffett indicator. I'm sure you guys would have read it along a lot of news articles that has been floating around. The Buffett indicator, so I'll just quickly touch upon it. The Buffett indicator, which is named after the legendary investor Warren Buffett, compares the total market capitalization of public traded stocks to gross domestic product. The Berkshire Hathaway chief executive has said that when the market cap of public companies is higher than the GDP, the market is overvalued. Now, honestly, in that case, the market has been overvalued for more than a decade. According to all these measures, stocks are overvalued. The only game in town, we all know, is the Fed. So Fed is going to be speaking this week in the Economic Policy Symposium. Very important to listen to what they say and take signals on how the market is going to behave in the next few weeks and months. That's your update. Stay safe and healthy, everyone, and speak soon.